Hi, I'm Jessica Amir for the Finance News Network with Managed Accounts Holdings CEO David Heather. Hi David, welcome back.
Hi Jessica, how are you?
Good, thanks. First up, for investors new to the company, just give us a quick introduction.
Managed Accounts Holdings is a specialist administration provider to the intermediary sector, and we're really talking about that sector comprising stockbrokers, financial advisory firms, wealth managers and investment managers. And we focus not just on general administration but investment administration, and we built a specialisation in providing managed account solutions, which is a growing part of the market, but equally we also provide wrap solutions and really any investment administration solution that part of the market needs. I'm very proud to say after the merger with Linear that we now administer about $12.3 billion. We're in a part of the market that has got increasing demand because advisory firms in the main are looking to actually create better solutions for their clients, which is a great thing to see.
And David, just on the Linear merger, just tell us about the rationale behind it.
Yeah, I think there's three key strategic rationale points. The first point is just scale. As at 31 December 2017, the combined entity was administering about $12.3 billion. So that really is a sizable business, and I think most firms that are looking for a solution in this space look for a provider that's got some scale and the benefits that come from that scale. The second thing is both of us being in the same space, Linear and us as managed accounts pre-merger, probably competed in similar markets for a number of years. So there's a lot of complementary products and services, but equally we did things slightly differently. So that really provides a best of breed solution capability for the merged business, and I think that's exciting for clients. And the third thing is clearly when you bring two businesses together that are doing similar things, there's a potential for synergies. And I think fair to say through the merger process, we identified about $3.5 million in synergies. And that was prior to us actually trying to bring the two different administration platforms, i.e. the technology and the processes together. So if we're able to do a little bit more in terms of integration of the technology, then we might be able to actually see higher synergies.
And David, what does it mean for clients?
We're going to have the capacity to introduce new solutions to the respective client bases for each of the firms in the merger. Obviously for new clients, looking to roll out best of breed solutions to those new clients using our distribution resources that we've been investing in.
And what's the financial impact for FY19?
If we achieve 25% year-on-year increase in revenues, we're talking about our revenues in 2019 being about $23.5 million. And that leads to an EBITDA of about $7.5 to $8.5 million. And that leads to an EBITDA of around 32 to 36%.
And turning to your December quarter results, just tell us about the pre-merger MGP inflows.
Flows for the quarter were $113.6 million, which was a record quarter for us, which is very pleasing. We're starting to see the benefits of the investment we've made into the sales and distribution team.
And what about the Linear inflows?
Look, the Linear inflows weren't for the full quarter, but for the 6 weeks post the merger to the end of December, they came in at about $74 odd million. We'll get the full quarter inflows in the next quarter, and it'd be interesting to see what that number is at the end of March.
And looking forward, what's the scope for new clients?
Well, Jessica, we signed 4 memorandum of understanding last quarter, which was positive. And certainly we're going through the process of building solutions to meet the requirements of those 4 MOUs. In addition to that, we've had 2 MOUs that we'd signed in previous quarters with large firms. One that's been a long-standing MOU where we've been working with the client to design the right solution for the client. And in addition to that, we've had a flag to the market that we'd signed an MOU with Shaw and Partners around the merger announcement. And certainly those discussions are positive as we speak.
Now to the structural shifts that the industry is seeing. Just tell us how it's going to play out for the firm.
We're certainly seeing a shift from an advisor point of view, moving away from banks and bank-owned advisory firms out to firms that are more independent or what we call self-licensed. I think what that's seeing is a movement of FUA also away from bank-owned platforms into the more independent platforms that are in the market. And a lot of that's been driven by a desire to have a more flexible through product list and really give the client a better solution. One of the things we want to do this year is roll out a wrap platform, and we certainly flagged to the market that we're looking to do that in the middle of the year. The other thing we've got is the whole managed account concept is now more a mainstream concept, which is fantastic because the clients get a better outcome than what they might have had previously. So I think on both fronts, whether we're providing wrap solutions or a managed account solution, the merged entities in a good place in terms of future flows that might come.
And lastly, David, what are the key things that we can look out for over the next 6 months?
From our perspective, certainly we've got a merger process we're going through in terms of integration, and there's a lot of positive things that are coming out through that process. Using better technology for our client bases, new products and services, which is embracing that best of breed approach. Tony Najasmic joined us last year to head up sales and distribution. Richard Carr has joined us of more recent times to grow our stockbroking segment. So I'm certainly looking forward to some positive news in that sales area, in particular the stockbroking segment. We're certainly going to be happy to share all that news with the market as we go forward in the coming months.
Very exciting. David, Heather, congratulations on the merger and thank you so much for the update.
Thanks, Jessica.